This is Mencari Australia. Breaking news.
So here's what just dropped. Australia's Reserve Bank held interest rates today. Cash rate stays at 3.60%. And before you think, oh, boring, nothing changed, this decision actually tells us a lot about where the economy's headed. And it's getting complicated. The RBA's Monetary Policy Board met this morning and decided keeping rates steady was the safest move. But the statement they released, it's raising some eyebrows. Let's break down what's actually happening. According to the official statement released today, inflation has picked up again recently. Now, it had been falling since its peak back in 2022, which was good news. But the board says some of that recent jump might be temporary. They're specifically calling out uncertainty around the monthly consumer price index data because it's a new series and they're still figuring out what signal to take from it. Here's what we can verify. Underlying inflation is showing signs of a broader increase. Part of it might stick around, and the RBA says they'll be watching this closely. On the economic side, things are actually moving faster than expected. Private sector demand, that's people spending money and businesses investing, is strengthening. The housing market's heating up again. Credit's easy to get, and the interest rate cuts from earlier this year haven't fully worked through the system yet. To zoom out for a second, central banks like the RBA use interest rates to control inflation. When prices rise too fast, they raise rates to cool things down. When the economy slows too much, they cut rates to boost activity. Right now, Australia's in this tricky middle zone. Inflation's supposed to be trending down toward the RBA's 2 to 3% target range, but it's not behaving the way they hoped. At the same time, the economy's showing more momentum than anyone predicted, especially in the private sector. Here's where it gets messy. The labour market. Officials say it's still a little tight, meaning there aren't enough workers for the jobs available. Unemployment has crept up slightly over the past year, and hiring slowed down, but businesses are still reporting difficulty finding people. Wages measured by the official wage price index have eased from their peak, but other measures show wages are still growing strongly. Unit labour costs, basically what it costs to produce stuff, remain high. Board governors cited uncertainty about the extent to which monetary policy remains restrictive. Translation: they're not totally sure if current rates are doing enough to slow things down. So what does this mean for regular people? If you are hoping for a rate cut soon, this makes that less likely. Anyone with a mortgage isn't getting relief yet. Renters facing high prices won't see that pressure ease from lower rates anytime soon. For businesses, borrowing stays expensive. That could slow expansion plans, but it also means the RBA is trying to prevent runaway inflation from eating into everyone's purchasing power. The statement mentions global uncertainty too, though Australia's major trading partners haven't been hit hard yet. But financial markets have gotten more nervous recently, with bond yields rising. That's a sign investors are pricing in the possibility rates stay higher for longer. The decision was unanimous, by the way. All board members agreed this was the right call. The RBA says it's taking a cautious approach, updating its view as new data comes in. They'll be watching global developments, domestic demand trends, and what's happening with inflation and jobs. Next policy meeting is in February. Between now and then, we'll get more inflation data, employment numbers, and consumer spending figures. Those will shape whether rates stay put or move. For now, the message is clear. Don't expect quick changes. The RBA is playing the long game, focused on price stability and full employment, and they're not rushing anything. Stay informed. More updates as they develop.
You've been listening to Flashwire, powered by redmencari.com, where facts still matter and stories still mean something. If you believe in independent journalism with impact, hit subscribe and share this episode. Your support keeps truth alive.
Breaking. Verified. Australian. When the story breaks, we don't wait. We verify, explain, and bring you the facts straight from the source.
Now, Optus has clearly failed here. Optus have failed to put safety first.
Company Optus and its parent company Singtel offer commercial
discussions based as friends and trusting. And part of our discussions, informally as well as formally, has been
together. To be honest, so many countries that you wouldn't have even thought of it, they came together. The world has come together.
Now, we do need to draw a line in the sand when it comes to the protests that we continue to see in this country.
The Flashwire is your rapid response breaking news podcast, a stripped down, adrenaline-paced bulletin that drops minutes after major stories break. It's designed for listeners who want accuracy and speed, not noise. Think of it as the audio equivalent of a newsroom's red alert light turning on. Each episode runs under 5 minutes, short enough to drop between scrolls, but packed with verified updates, eyewitness info, expert sound bites, and a forward look at what happens next. No spin, no filler, just what you need to know and what comes next.